Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is the series where we analyze and decode Nifty on multiple time frames so that we are well prepared to handle the next day's market with much more clarity and confidence, right? So in case if you like the way I analyze Nifty, please like the video, subscribe to the channel, share it with your trading friends, as well as put down anything that you might have to say in the comments box, right? Before I start the analysis and the video as usual that we do every day, what I would like to tell to everybody of you is a word of caution about trading in the Indian markets right now. Please reduce your quantities and be quick with taking your SLs or booking your profits in case you are in a profitable trade. Right now, you have to understand that we are trading in uncertain scenarios wherein which each with each development on the war front, the market can react in ways in which no uh, technical analysis would be working perfectly, right? So Indian markets has reacted in the past to the Russia-Ukraine war as well, and I'm sure this is the first time that I am trading Nifty when there's a when India is itself on the brink of a war with Pakistan. And I'm sure it would say the same would be the case with majority or most of the traders right now, right? I'm sure nobody would have traded any particular earlier war that India has gone into. So this is something wherein the times are uncertain and the results would be the way the market behave and reacts would be very much on the news that is being circulated. And with the advent of social media, news spreads like wildfire. The authenticity of it gets verified later on, but then markets would react to it by the time, and then maybe even if there is no base to that particular news, the your SL still would be gone. So right now, uh, just a word of caution, be very, very aware. India VIX has shot up massively in the second half today by around 10%. It is now at 21. So again, word of caution to everybody. Please be very, very careful with your trades. Be very, very quick in booking your profits. Be very quick in booking your stop losses and be extremely quick in take booking your positions. Basically, do not hold the positions for long, and in such scenarios holding overnight longs or shorts can be extremely dangerous to your capital, right? So on that note, let's just start with what we had planned yesterday for today's market versus what actually happened, and what are the trades that we took, and how did we trail them, how where did we book out, where did we place the stop losses, and everything. We'll discuss it in detail, right? So yesterday, what we had planned was we'll be planning a long trade above this particular trend line with a pullback, and we'll plan a short trade only below this swing low. Uh, Now, why the reason why I gave this particular swing low was I always am a player of market structure. I give high importance to market structure, and I wanted this particular swing to be taken out uh, so that the market structure changes and before we can enter into a short position. Plus the cash data for FIIs that was coming in since till yesterday was very positive, and that is the reason on the short side I had taken a very cautious approach on taking a short trade. Now, markets did not give us any long opportunity around here. Markets went again in sideways without a lack of moment, with a very clear lack of momentum, and went completely sideways till around this particular time, where at one point of time, in case if you would have watched the previous videos around expiry, I have told you that I told you guys that it is only on the expiry days that I look at the open interest and I pay sharp attention to it. And there's one particular reason for it, right? On expiry days when the premiums are very close to getting zero, I don't trade in the current week expiry. I trade in the next week expiry, but for people who are majority of the people would be trading in the current week's expiry, and the premiums are uh, very low. And option writers, when these option writers get trapped on either side, a good move comes, right? Whether it's a short covering move or a long unwinding move, these moves are quite good, and it is the only reason why on expiry days I look at the option and the open interest data. And I try to find out which are the probable price action, which price levels are there, which ones broken and price is sustaining on them, and it would hit the stop losses of those people who have shorted those particular call or put options, and you can make a good move. Money out of that particular move which is coming. So I took a trade around here when the market was sustaining around these levels above 24,400. So at one point of time, the 24,400 call option had the highest OI, around 7 crore plus open interest was there on 24,400, and market around here was sustaining. And because there's a less decay in the next weeks of expiry uh, combined with the India VIX that was increasing. On the options price chart, I got a breakout above the last swing high, and I had entered a long position over here. I had a very small stop loss of 5 points, right? So that was the reason I entered early, even though it was not confirmed on the spot. And I could see some people exiting the 24,400 call shorts, and that was the reason I entered early into that. I took a small stop loss of 5 points on that particular trade, and after that time, after which I exited, and this particular fall came. Now, again, the importance of SL on that particular chart when I had entered, I had my SL prefix at 5 points below from my entry price. It was strategically placed. It was as per the rules of my setup, and that the stop loss triggering means I was going wrong, and there was no position, no point in holding on to that particular position. And as you can see, if I would not have exited, what was the extent of uh, loss that I would have taken, right? Now, this particular fall came in, the day's low was taken out, right? This was one trigger to go short on the markets, but as you all know, we have to wait for a pullback. This was the pullback which came in. This is where I shorted the market. Initial SL was around here. Once markets came till here, made a new low, I moved the SL around here. Markets again came up, gave a good new low. I moved the SL here, but I exited somewhere around here, right? As I told you guys, I exit around 3 o'clock. So a good short which was carried on from here till around these levels was a good trade. Plus the rise in VIX, even though the call option of next week did not decay much, but the put options did increase by quite a lot. So because of the VIX, I got a good ROI on this particular trade, right? Now, the initial plan was to short the markets below this particular line, below this particular swing, again with a pullback. So anyone who would have followed that would also have made good amount of money. The entry was around here. This was the closing below this particular swing low given got by the pullback. You got entry somewhere around here. Market gave a low, gave a pullback, never triggered your stop loss around here, and then again gave a good move on the downside. So that is something which was a good trade if someone would have taken here. But again, you have to see and understand. I also say that the opening is of a lot of crucial importance about here. So this was a zone wherein, in case if markets would have opened with a gap down and then this would have broken, it would have given a good trade early in the morning. But markets opened with a high, went up near the day's high, was near a crucial OI resistance of 24,400. From there, once it broke the day low, that was your trigger that okay, there is weakness in the market. So this is about the story that I ask you guys to build around the market. Try to talk to the market. What is happening, right? Market did try to spend some time around here, and after spending so much of time here, it should have crossed over it in case if had to, right? If it is not, the big money is not in bullish trends, bullish trades right now. They were silently accumulating puts around here, and that is what you should guys look at. But not necessarily you would be entering around here. Even if you enter around here, you are in the trade in the trend with them for some time of the entire move, you'll still make some very good money, right? So that was the reason. While the initial plan was to short around these levels, but I shorted once the day low was taken out, and I did not break my rule. I waited for the pullback to come. It was not that the day low was gone and I shorted immediately. No, I waited. So in case if you would have shorted around here, say for example, you are an aggressive trader and you would have shorted around here, your stop loss would have been very, very big, right? Your stop loss would have been at least minimum around this particular swing high. And that is why it is always important to wait for a good pullback. And so you can reduce your stop loss as well as get a confirmation that yes, the trade is now going in your favor. Right. So this is how I traded today. Uh, I have already given the word of caution for you guys. So market has right now come to our support area. right? If we look at a day chart, so this is the average closing, which is almost a lot of because there was a good fall came in at the during the last 30 minutes. That was the reason that the average closing is 24,273, whereas markets has actually closed around these levels on the lower time frame chart, right? For tomorrow, the plan of action will be again extremely simple. We are short on the market below this. We are expecting a deeper retracement. We can test these levels, right? These are the levels of on the daily chart. On the daily chart, this is the good breakout level which was there. And below this, this is the level till which we can expect the markets to retrace without any cause of worry in the change of trend, right? So this is what we had planned earlier. So before, again, I'm pretty sure that this zone would act as a good support and to the market. So once we are breaking down from here, we'll wait for a pullback to go short, and we'll keep the first targets around this place. And for a long trade, so these are war scenarios and news can trigger moves on either side. We need to be prepared. I'll just remove this particular line, of no use for us now. We will look at a long trade only above today's high, right? In this entire zone would be full of volatility. This is a big zone. And in case market opens with a gap up, it will turn volatiles and it will hunt SLs on both sides. So it is better to save your capital and not trade during this particular time and wait for the levels to be taken out before entering your trades, right? So that's it from my side, guys. Stay safe, keep your capital safe. Trade less, observe more, and only go in with limited quantities, right? Risk very little. The VIX is high. This is what I can suggest to you guys. We are at the brink of a major war right now. How it unfolds, whether it is escalated or there are people or there are countries who are mediating and we are de-escalating the issue. That is something which will develop as and when it comes. But we as traders need to first focus on our capital and to safeguard it, my suggestion would be, as I have already told before, be extremely quick in booking your profits, be quick in taking your SLs, and trail your stop losses very tightly. And the foremost thing is reduce your uh, position sizing, right? If you trade in freeze quantity 1800, I'll say divide it by three, right? Reduce trade in just one third quantities that you regularly trade in, and I'm sure you would be fine, right? So that's it from my side for today. Hope you guys have a good evening. I'll see you guys again tomorrow post the market. Cheers. Have a good day. Thank you so much.